of Nigeria, in an unanimous decision, voted to retain the monetary policy rate at 11.5%, leaving other key parameters unchanged for the fifth consecutive time. The cash reserve ratio was therefore retained at 27.5%, liquidity ratio at plus 30%, and a symmetric corridor at plus 100 and minus 700 basis points around the MPR. The outcome of the MPC meeting at the end of the two-day meeting came as no surprise, as many as some analysts had projected that the committee will leave the rates unchanged in order to sustain economic recovery that the country is currently experiencing. Now, going by the cautious optimism trend in the global output recovery, according to analysts, the decision seems reasonable as the CBN remains squeezed between the necessity to sustain the real economy as growth remains fragile and to curb elevated inflation, which remains well above CBN's target of 6 to 8%. This further means that hiking rates in recognition of increased upside risk to prices and mounting external sector pressures will further constrain economic growth, while a rate cut is likely to intensify inflationary pressure and to amplify the currency risk. To make more sense of this, I introduced him earlier. He is the managing editor, ProShare Nigeria, Mr. Teslim Shitabe. He joined us live via Skype. Thank you very much, Mr. Shitabe. Good afternoon to you.
Good afternoon, Tolu. It's a pleasure being with you again this afternoon.
Yes, it's been a while. What were you expecting after that two-day meeting? Let me start that way. Were you expecting that retention, or were you expecting a shift after the two-day deliberation?
Okay, I think we should roll back a bit, right? Let's look at the National Bureau of Statistics data that came out a few days before the MPC meeting. First, the first thing we noticed was that inflation rate had fallen from 18.17% to 18.12%. So that was a positive development, wasn't it? Then we also noticed that GDP growth rate improved. We saw GDP rising to 0.51% in Q1 2021 as against 0.11% in Q4 2020. Now, with these indices moving in the right direction, it was quite obvious that CBN would likely retain its current policy, given the fact that those two indices in particular were moving in the direction that the CBN would definitely consider pleasant. So I think most analysts thought that things would stay precisely where they are. Now, some analysts have said this is dovish. For me, it's rather sitting on the fence. If it was dovish, I would have expected that the CBN would want to accommodate fiscal policy, whereby more money and you want to stimulate the economy, so you want to see more growth, and therefore you're allowing money supply to increase. Now, the CBN didn't do that, so that's what I would have considered dovish. Now, if it was hawkish, I would have expected that CBN would perhaps raise the MPR, that's the monetary policy rate, from 11.15% by about 500 basis points. That means it brings it to about 12%. And that would have seen a bit of a tightening in the economy. And that would have suggested a hawkish attitude. So as it is today, I think that the CBN was just where we expected it to be, sitting on the fence.
Sitting on the fence, looking at global output recovery and other global issues that we don't control, price of crude, production quota, and all of that. What effect do you see this having on the generality as our economy continues to move at this pace? Global effects, global issues.
Global issues, right. We are seeing growth in the global economy. We're seeing a gradual recovery of both financial and real sector markets. However, it's cautious growth. As you have noticed that you've seen a country like India witness a spike in its COVID-19 cases. That has meant that the Indian economy has had to forcefully slow down. We would have expected an Indian economy to grow for between 6 to 7% per annum in 2021. It's rather doubtful that it will be as optimistic about that growth rate currently. China was already with chip manufacturing. And so China is currently considering shifting away from chip imports to see if it can explore the possibility of manufacturing chips locally. So supply chains are going to still see some amount of disruption in 2021. Growth will not be as spectacular as one would have hoped. So rather than seeing a Nike kind of swoosh, that rise, that sharp rise in growth after 2020, we'll see a more moderated environment. As a matter of fact, in some global economies, we will expect to see both a K and a W-shaped recovery. Now, the K-shaped recovery will see situations where large companies are actually doing quite well. SMEs will do far less better than they had in 2020. That's basically because they would have had problems concerning supply chains, like I noted earlier. They would have had to face increased costs as a result of rising oil prices. And in some economies, we're going to see a W shape. That means that basically there was a decline in 2020. There will be a brief rise in 2021. But as we move into the year and oil prices remain high, we will see a slight decline again. We're already seeing that kind of event happening in India, and the Indians complaining bitterly about the rising price of oil and its impact on rising costs in the Indian economy. So in some cases, we'll see K-shapes. In other cases, we'll see W-shapes. But definitely, we shouldn't expect a Nike swoosh. Growth will be moderated in 2021, even though we will definitely see growth. And especially for frontier markets and emerging markets that had generally outpaced more matured economies, the rate to which they outpace those economies will kind of slow down in 2021.
Mr. Chidobe, let me follow up with interventions by the Central Bank of Nigeria, because the governor highlighted all of that yesterday, trying to let us see what's being done on the monetary side. Yes, we know it must be consolidated or complemented by the fiscal side. Pharmaceutical sector, there's been a lot of focus. The creative sector, there's been a lot of focus. Not to talk of agriculture, which you know what's been playing out. In your words, because I know you follow most of all of these figures as they come up, what impact would you say all of this has had on the generality of Nigerians, or all that are benefiting from all of these schemes? What impact?
Well, I think the impact has been quite modest, really. We've heard the CBN governor talking glowingly about the impact of the intervention of the CBN on the agricultural sector, and that has resulted into the growth we saw in Q1 2021. Growth was 0.51%, But if you look at it against the first quarter of 2020, growth was 1.87%. So it was significantly higher than it is in Q1 2021, about 3 times higher. So the optimism in the agricultural sector, I think, should be tamed, because security seems to be fundamental to growth of all these sectors we have mentioned. You have to have a secure environment for you to be able to grow those other sectors, whether you're talking about manufacturing, agriculture, or even the creative sector. You require a stable economic environment. So far, Nigeria's economic environment hasn't proven to be as stable as we would have loved it to be. If you look at the stability index, security index, the global security index, Nigeria is behind Niger Republic. And what that means is that if you're going to look at raising instruments in the international market for the purposes of direct investment in Nigeria, it's going to be quite expensive, because there's going to be a risk factor associated with country risk. Nigeria's country risk has worsened as a result of insecurity. And that means that international cost of capital will rise. And if that happens, given the gaps we have in the local environment concerning available funds for investments, we will be finding ourselves in a rather tight spot in 2021. So I think security should be taken a lot more seriously. I think the CBN has examined the impact that its policies have had on the agricultural sector. And that can easily be seen by a few figures. If you look at crop production in Q1 2020 and 2021 were basically the same, just slightly over 19%. But if you look at the heart of the COVID-19 period in 2020, you find out that crop production actually rose to as high as 24% of GDP by, I think it was Q3. It had risen to that before it tumbled to 19% in Q1 of 2021, even though it did end the year slightly above 22% of GDP. But generally speaking, the agricultural sector has not been the chief engine of growth of the economy. Rather, what has happened has been that In the first quarter of 2020, in the fourth quarter of 2020, we saw the oil and gas sector growing in the inverse direction. Rather, it contracted by 20%. Right? The oil and gas sector contracted 20% in the last quarter of 2020. But if you look at the first quarter of 2021, the oil and gas sector contracted again, but only by 2.2%. So the rise in oil prices has meant that you've had a more favorable oil and gas sector. The oil and gas sector has been able to reduce the level of contraction. And that reduction in the level of contraction seems to have spurred the GDP growth that we have seen, not necessarily the agricultural sector.
Now, sustained economic growth, which is very important at this time. Lending to the real sector comes into my mind. Do you see the commercial banks are towing the line of the central bank? Are they also supporting one way or the other in getting monies to the real sector, to all of those people that need these monies to run their businesses? How well would you rate commercial banks in this process?
A clever question, Tolu. I find it difficult to actually answer that question, basically because Nigeria has a structural problem. And that structural problem also feeds into the services sector. I mean, if I'm going to lend into an environment that is insecure, I'm going to charge a premium. And it's not because I don't want the economy to grow. It's simply because there's a higher risk in lending. And that risk exists. I have to cover that risk one way or the other. Don't forget that the money that banks lend is not their own money. It's other people's money. And therefore, they have to justify how they use other people's money. And so you can't simply throw money at a problem in these kind of situations. The money that you are going to invest in are going to come at a cost. Let me give you a typical example. The agricultural sector is a high-risk sector. Currently, we have seen situations where farmers have been driven from their farms.
Yes.
In one case, 43 farmers were actually slaughtered and warned not to go back to the farms. Now, imagine a situation where I lent money to these farmers. How in heaven's name would I expect to get the money back? The farmers are simply not on the farm. It's not because they don't want to farm. It's not because they cannot farm. It's simply because the environment is not conducive enough for them to farm. So if I'm going to have to give money to the farming or agricultural sector, then I'm going to have to factor in those high risk considerations. So I think the banks would like to that's the business they're in. However, in doing so, they have to be cautious. Don't forget, over time, at least in the last 4 quarters down, except for a few tier 1 banks, most other banks have been able to pull their performing loans, the NPLs, down below the 5%. You know, a few banks are higher than that. They're around 8%, 9%, 7%. But the majority of the 13 banks listed on the Nigerian exchange, that's the NGX, which used to be called the Nigerian Stock Exchange, have found situations where they've been able to drag down those non-performing loan figures. So I don't see the banks being too enthusiastic of lending to sectors that they consider to be high-risk sectors. They want to play safe. That's the truth of the matter. So raising them will be a bit difficult. What will perhaps happen is intervention funds will be unlended to the various sectors like agriculture. And that's the way the banks will support. In other words, what you're going to see is not direct lending from depositors' funds to these various sectors, but a pass-through mechanism where CBN's intervention funds get unlended.
All right, then, network, we'll try to see if we can connect back to Mr. Shitabe there so he could just wrap up his submission regards to the last question. Very, very interesting conversation there, talking about the resolution at the MPC meeting for the month of May, retaining all rates unchanged. And this has actually generated reactions. The CBN and that committee have a lot to manage, a lot to really grapple with at the moment. Inflation at 18.12%, GDP growth rate at 0.51%, and all other rates, all other figures coming in. Unemployment rates still also on the high side, 33.3%. When you put all of this together in a basket, you know that yes, these guys really have a lot of work to do. Yeah, so no, that's just what we see. We'll try to see if we can reconnect with Mr. Shitabe before. Okay, Mr. Shitabe, please make your point. You were trying to wrap up on that.
Hello. Yes. So if you can hear me.
Yes, very well.
If you can hear me. What I was saying was basically what you're going to see is what I call pass-through lending. That means that the money will come from the central bank and pass through the banks to the various sectors. But even while the banks do that, they will be cautious in the kind of loans they give to customers, because at the end of the day, they have to return these loans back to the central bank. Admittedly, the rates are concessionary rates. We're looking at 5%, which is a very decent rate given these current environments where inflation is running at 18.12%. So really, basically, you're lending money at a negative real rate of return. So that's good. That should spur economic activity. However, the high-risk environment is also going to be a very important consideration for the various banks. I want to get my money back. Yes, I agree that it's rather inexpensive money, but at that same time, it's money that must be returned, and so I'm going to be cautious in deciding which sector I will actually lend to. So there will be a lot of restraint in expansion in certain sectors of the economy, but the agricultural sector will have a lot of funds available to it. I think already we've done over 300 billion in that area, while another 300 billion has gone into other intervention schemes that are similarly concentrated in the southern part of the country, as the CBN governor pointed out. But like I said, my expectation for growth is modest for the year 2021. If you look at Fitch is also projecting that Nigeria's economy will perhaps grow in 2021 at about 1.75 to 1.8%. Although the IMF has revised its own projections upwards. Initially, he had projected that the economy would grow at 1.5%. He's added another 100 basis points. So we're looking at the economy, according to the IMF, growing at about 2.5%. That would be quite good, because that would be slightly behind the growth rate of the national population, which as at 2016 was just around 2.6, 2.7%. So if the economy does grow at 2.5%, that's welcome. But I think that's quite optimistic, quite honestly.
Can we wrap up on this note? Any quick wins for us at the moment for us to quickly key into the low-hanging fruits for either the fiscal side or the monetary side as we wrap up this segment of the show?
Okay, great. I'm a believer in not wasting a crisis, right? I believe that every crisis provides opportunities and it shouldn't be wasted. I think that this is a great opportunity for us to review our whole fiscal framework.